If you always find yourself in the wrong direction of the market and you confuse yourself with different ways of finding the daily bias, this video is for you. I'll show you my personal way of finding the daily bias. That's the only video you'll ever need about finding the daily bias. If anyone needs one-on-one mentorship, check out the description and let's get into it. So I know you guys really struggling with finding the daily bias, and I know there are multiple ways and a lot of different ways to find the daily bias. But in my opinion, all of those methods and ways to find the daily bias, they all lead to one thing, or actually two things, two main concepts: liquidity and fair value gap. So any way that you use, it's always going to lead to fair value gaps and liquidity. So how about we only use those concepts to find our daily bias? That's going to be the easiest way to look at the chart, instead of confusing ourselves with looking at different methods that don't happen every day and you don't really know what you're doing. So we're going to be focusing on fair value gap and liquidity. And you guys should know by this point that price only does two things, right? Either rebalancing fair value gaps or seeking liquidity, or basically sweeping liquidity. So this is what we're going to apply today, and this is a practice for you to see how I do it, how I do find my daily bias. Now we can see we are on the weekly time frame. This is the time frame that you're always going to be looking at the price. So at the start of the week or at the start of the day, if we have expansion, we're going to be looking at the weekly, and what I'm going to be looking at is high probability point of interest, either fair value gaps or highs and lows, and then we're going to go from there. So in this video, I'll be finding my daily bias. We're not going to be going to the execution. It's only about finding the daily bias, and then we can discuss a little bit about the execution actually. So we're going to be looking at the weekly. So right here, price did sweep the previous candle low, started going up. We had no fair value gap actually to the downside. What I was looking for is maybe this level to be taken, not taken yet. Maybe price is going to take this and then go to the fair value gap. So we see a little bit of reaction from the fair value gap, but it was kind of an aggressive. So at this point, we don't really know what's happening. There is this fair value gap that price could go lower. There is this low in a fair value gap. Price could go here. So let's see what happened. Actually, price going up. So either price respecting this level or taking the high. Those are the two movements, either external to internal or internal to external. So let's see what happened. Price is going up. You can see somehow price is going, looks like it's going for this high, because this is the high of the range. So after price taking this high, where it could go? I mean, I see nothing in here. There is nothing in here. If I see no fair value gaps on a price action, what do? We go to a lower time frame. So the only two time frames that we're going to be using for our daily bias are the weekly and the daily. So let's see if this high is going to be taken, and right now it's taken. So this high is taken and we see no fair value gaps in here. We know that now we're moving from external to internal, hopefully to the downside. I'll wait for price to close this candle and see the tab of the closure that we're having here. Today's video is sponsored by Hanko Trade, one of the best brokers in the business, with spread as low as 0, low commission, and you can trade all markets including forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. So it looks like, oh, we got a rejection here. At this point, every position that you're going to take, either on the 50 minutes, on the 1 hour, they're going to be to the downside. So your bias for this time period of the sweep is going to be to the downside. Everything that I'm going to be taking is to the lower side. And to where? For now, I don't know. We have this low and this low, but do we have a fair value gap inside of this range? Actually, if I mark this and I take it from this to this, that's our current range right here. No fair value gap here. So what do? We go to the daily. That's the second and the only actually time frame that we can consider for the daily bias. So what do we see here? We actually have a fair value gap here. Anything else? Yes, we have this fair value gap right here that has a high above. So that's a fair value gap that price could come to, and that's where mostly the reaction would be. So that's where I would be looking for shorts all the way to this level, and then if I see a reaction and a displacement from this level, I'll be looking for the upside, and I would be looking at the weekly again. So this is my level that I'll be looking for a change in the bias. Until then, my biases go to the lower side. If we play the price action now, you can see that, oh, we had another sweep. So price was actually respecting this fair value gap. But as we said, we're only looking for shorts. So if there is no short position at this daily fair value gap, it's not really going to be the highest probability one. Why? Because first of all, it's not on discount to buy. And what's going to happen is we have no weekly fair value gap here. So it's only daily. It's not going to hold that much. Price want to go lower into this daily fair value gap also, no weekly. but this is on premium at least. Now, if we play the price action, everything that I'm going to be, especially after this sweep of liquidity, I'll be only taking shorts right here. So if you see, this is your bias. You see, short positions are going to be working until where? So everything that I'm going to be taking here is short positions. And we can see we have also a fair value gap here that was respected, going lower. Basically, this is your drawn liquidity now. This low that has a fair value gap below, that's our drawn liquidity, which means that at this sweep, everything that I'm going to be taking is shorts. My bias for this time period is shorts. And you're going to notice is short position here, mostly working. The probability of basically taking shorts here are much higher than the probability of taking longs. Any long here will mostly be, I would say, low probability. So if you see here, if we keep going, where is price potentially reacting from? And we can see somehow a displacement and price filling the daily fair value gap. We could be going up from here. So if we go back to the weekly and see, we have a reaction from this point. So a little bit of reaction here, a wick. Let's keep going. And now we're going up, actually coming back and going up. So at those days, when we have the reaction from this level, now what are we looking at? We have external to internal, now internal to external. Now price could come to the external mostly because we have internal to external, but it could also be price reacting from this fair value gap. There's always a potential. So my draw on liquidity, and in other words, my bias from here, reacting from the daily fair value gap inside of the weekly range, my bias is only going to be longs or bullish until price hit this fair value gap. I'm going to be evaluating the reaction of this level right here to where? Either to go to the lower side or go up, and mostly going up. Why? Because we have already the internal move going to the external one. So mostly it's going to take the highs, but I'll always keep an eye at this fair value gap. So from here all the way to here, and if we go to the daily, we're going to see that this is a much bigger range. So from here to here, I'm only going to be looking for longs. And if we can see what's going to happen here, and we can notice now that if we take from this level, when we see the reaction, or from here, that the probability of taking longs are much higher in probability, much more than taking shorts. So if you take shorts here, you'll be in the opposite side of the market, just using fair value gaps and liquidity. Now back to the weekly, we can see simply that price is coming here. We don't know if this level is going to be respected or not, but mostly not. So we can see that price actually closed above the 50% of the fair value gap and kind of above or at the same level of the fair value gap. So it doesn't tell me a lot about if this level is going to be respected. Now, let's see here. This candle still doesn't close. So we could be going to what now? We're going from internal to external. So now this is my level of liquidity. So until I confirm about the displacement at this level, I'll be only going up. Let's see what happened here. So simply, we have a nice rejection from here, a little bit of a rejection, but price is already above, like it went to the order block right here. Two scenarios here. Either price coming lower. Now to buy, I'll be looking for this liquidity to be rebalanced, to go up and to go to the external, or price to simply go up from here. So two scenarios. Now if you go to the daily, look for the displacement and where is it at. We can see that on the daily, actually the fair value gap is already respected. This one is only a weekly fair value gap, not a daily. So we could actually see price reacting from here, and we can see it was too close to the weekly fair value gap, and it could be going up from here. Let's see, since price is disrespecting the fair value gap also in the daily. So what we see here is price hanging around the fair value gap right here, and it doesn't look like it's respecting the fair value gap. We're still not sure if price is going to go up from here or go down from here. But we have two scenarios, either price coming to the fair value gap right here, going up, and now this is going to be my draw on liquidity, or basically if it broke above this point, then my bias is go to the high. So either way, we know where the bias is depending on what's going to happen after. For now, we're a little bit not sure. Okay, so now this is my draw on liquidity. My bias would be go to the lower side, but I'm not going to be taking a trade here until this low is taken into the fair value gap, and then my bias after the displacement and at least the reaction on the rejection from here, I'll be going to the external range of the liquidity. And we can see sweep and a very nice reaction from here. So we could be going up from now. So if I go to the weekly, we got the rebalance of the fair value gap, and now we could be going up. Actually, another sweep to the downside. and we can see that price is actually going up. What is my drawing liquidity? It's this high and now it's taken. So it's as simple as this. So price filling the fair value gap here, at this fair value gap, a little bit of a retracement to the fair value gap, going up, taking the external liquidity. Now at this point, we're still not sure because price is taking the high. So it could be price may be coming again to the fair value gap, or creating another fair value gap here, or actually taking highs. So taking this high if price decided to go up more. So we don't know as of now, and actually price did take this high. So we're going to be evaluating what's going to happen after taking this high. If price decided to go lower, we're going to see where it can go lower. Now we play the price action and we can see that we have this big fair value gap here, bullish fair value gap. But after taking liquidity, depending on the reaction of this candle, this could be respected or could be disrespected. Now let's wait for the closure of the candle. You can see that looks like it's going down, and this fair value gap was not in discount. And this fair value gap is a fair value gap that is created before a sweep of liquidity. So we have a fair value gap, we have a sweep of liquidity. Mostly this fair value gap would be an inverse fair value gap. So mostly it's not going to be respected. And we're going to see, but mostly after this liquidity sweep, our bias is going to the lower side to fill this fair value gap at least. And then to where actually going to the fair value gap here. And maybe a small reaction from there. But this is what I'll be looking at. I'm going to be a little bit indecisive here because I'll be waiting for this fair value gap to be disrespected. Then I'll aim for this fair value gap. So let's see what's going to happen here. Simply price not really respecting this fair value gap, not much, and actually going below it and kind of closing below it as of now. And there you go. So closing below it, it did disrespect the fair value gap. What do we see in this case? There was a fair value gap, a bullish one. There was a fair value gap that is bearish, created with the disrespect of the bullish fair value gap after the sweep. So this is even a higher probability. This fair value gap right here, from this low to this high, this was the one respected here. So after price kind of disrespecting and maybe on the daily closing below the fair value gap, we created a bearish one after the sweep. This is where we could enter targeting what? Now, what is our drawing liquidity? This low in a fair value gap. And if you guys know, one of my best levels of liquidity is this one, low in a fair value gap. So this is my draw in liquidity as of now. And you can go to the lower time frame and look for an execution there. So we can see price is actually gonna go to that low, taking the low. And then if we go to the weekly now, do we see any other fair value gap to enter from? Actually, no fair value gap. So no fair value gap at this point. Price could actually, and I'll be removing all the drawings here just to make it more clear. So we had this previous liquidity level, and then displacement to the downside. We had the mitigation of this fair value gap, and it's a bearish one. And we are now on a weekly fair value gap, a bullish one. So let's see if this fair value gap would be respected or disrespected. If it's respected, then I would think about price going to where? What is my drawn liquidity after price respecting this fair value gap? It's this high. But let's see what's going to happen. A little bit respecting, but then big retracement to the downside. And the weekly actually did close below it. So for now, this fair value gap is not respected. What do we look for? If this fair value gap is not respected, we look for the external liquidity right here, and also this low and this low. So failure swings, I'll take the lower one. You could take this one. There is a potential of a retracement, or there is a potential of a rejection from here or here, but I'll take the lowest one. There is this fair value gap. So if price disrespects all of those levels, I'd be looking for this one. And we're going to be looking for the bearish ones too. But for now, this is what I'm seeing. If this fair value gap is disrespected, and it's already disrespected by this body closure, price is going lower. This is my draw in liquidity. And my bias from here all the way down to here is going to be going to the lower side. And then what is after? If this level is respected, and there is a, I would say, an engulfing candle, or there is a rejection candle, there's displacement to the upside, then I'd be going up. Otherwise, we could go lower to those levels, this one and this one. And let's see now the closure of this candle. So it looks like the closure of this candle is still going lower. This is my drawn liquidity still. And we can see that price took this level. There is a small rejection from here. Let's see if it's going to continue to the upside. There is still nothing, and price did actually win below it. So this level is still not valid. And we don't have any fair value gap here to go to the upside. We have no fair value gaps here to continue lower. So I think for now, we're just going to be going lower. And simply price, again, sweeping this level of liquidity, given a small reaction, after price sweeping this, we could be going for short-term long positions, but it's not going to be that confirmed one. So no confirmed daily bias here. And price actually taking this level. And we're going to be comparing the closure of this candle to all of those candles. Let's see. You can see that, oh, actually this one has a different closing. So if we compare this closure at this level, it was a bearish one. At this level, it was a bearish one. And at the last level, it's actually a bullish candle and it's a big rejection candle. So at this point, we could be actually looking for short-term longs, but it's still not confirmed. It's going to be confirmed after this candle. So let's see. And actually price is okay. So far, not that much, not confirmed. I want to see another bullish candle. And this is a bullish candle and then a breakout to the upside. So at this point, everything that I'm going to be looking at is buys. As of now, everything that I'm going to be looking at is buys. Now, so if we consider this price action from this low to this high, and that's our current dealing range, what do we have? Simply good rejection from this level, price closing up. Where can we go? So simply after this rejection, I'm only going to be going long. So my bias after this sweep and after this confirmation, this candle, everything that I'm going to be looking at is longs. To where? Now, in this price action leg, any PD arrays or any point of interest that we can look at and then simply decide that, oh, I want to go long from here and simply decide, oh, maybe I want to change my bias from there. 2 points of interest here. The first one is this high in a fair value gap. So that's my first one. We have a fair value gap and we have a high on it. So this is a level of liquidity that if price reaches, I might be changing the bias either temporarily or permanent. Now, what is another point of interest? All the way right here, I don't see anything except this level of liquidity. That's a pullback, and that's a level that price could actually respect. If you see here, what do we have? This high of a candle, and why this one is a valid one. So if we start from here, this high was not taken, this high was not taken, this high was not taken, this high was taken here, but the low was not taken. But in this case, this high was taken by this, and then the low of this candle was also taken later. So this is a valid pullback. Now, when it comes to valid pullbacks, those are high in probability, in my opinion. Now, my bias would be going up all the way to where? Either this level or this level. So anything from here all the way to here, it's gonna be high in probability if you go long. Any long position you take, it would be higher in win rate. We see what's gonna happen here is price simply going up and then some retracement and going up. And we can see price actually hit my first draw in liquidity. So as of now, I'm going to be looking for shorts temporarily, and it depends on the reaction of this candle. I'm going to be looking for shorts, and we're going to be waiting for the closure of this candle to see what's happening here. And we can see that, okay, there is a reaction from here. So we could be going either down to the upside or just lower from here. But I'm not sure if we're going to be going lower, and why? Because we have this higher probability level of liquidity. So this level right here is my higher probability liquidity level, and I'm pretty sure that this is the real draw in liquidity. So price a little bit going up, but my bias when this level was swept is going to the lower side if I see the rejection from here, or just continue up here. And we can see that price is actually reacting. And what do we have here? We have a fair value gap. This fair value gap could just push the price higher. So if you see on the lower side, we have no fair value gap. This is the only one, and it's confirmed after price closing this candle. And if you go to the daily, it's going to be much more clear. What do we see here? Price simply taking this level of liquidity. My bias is going to be to the lower side, then another sweep to go to the lower side. So after the first sweep and the second sweep, my bias would be to the lower side. To where? To this weekly fair value gap to go to the upside. To where? To the real draw on liquidity. So it could be just price retracing down to another point of interest to go to the real draw in liquidity. Whenever price hits this fair value gap, could go up from here. Now we have this big fair value gap. Where can we refine it more? And you guys know that I love to see overlapping PD arrays. So what do we have here? A high that was broken above, and we have a fair value gap here. So this is my overlapping. If we play the price action, what do we see? Price actually coming to that overlapping and then going from where? Reacting from here. And where do I think price is gonna go? Actually going up to this fair value gap, and then maybe a small rejection from here, to the lower side and then going to the main drawing liquidity. This is how I see it, and this is how I'll be looking for positions on the next week and the week after. So in simple terms, and to summarize, understanding of liquidity and fair value gaps, and understanding of the movement of external to internal and internal to external, as well as the understanding of the displacement and the creation of a fair value gap, will make you a master when it comes to finding the daily bias. Everything that I do when it comes to daily bias is only using fair value gaps. Fair value gaps are magnets, especially when it's overlapping with another PD array. Remember that when it's overlapping with a high or low, that's a high probability. That's all I do. That's how I was able to really find the daily bias for the previous month and also provide it to the people in Discord. Every time we know where price is going to, we know exactly where price is reacting from. Hopefully you guys like this video. Make sure to hit the like button, subscribe to the channel, join the Discord, and leave me a comment with whatever idea you want me to post videos about. So if you have suggestion on the videos, make sure to write it down. This is Molham, and I'll see you in the next video.